Bhamre, research head at Religare Broking, who joins us now. Siddarth, hi, good afternoon. It's autos all the way for the last many days. In fact, even today, a lot of the auto ancillaries are doing well. Post the run-up, which are the stocks that still stand out for you?
Sonia. The auto stocks, we have been positive since quite some time now, and they have been doing pretty well. And I still feel valuation-wise, there's still a lot of room on the upside. But Sonia, if auto stocks are doing so well, if auto numbers on monthly basis are quite encouraging, auto ancillaries can't remain behind for long. In fact, I distinctly remember today you talking about how, what's happening in California and what was the thing going on in EV space. Exide industry is something which we are liking a lot, and from the auto ancillary space. And I would say why. Firstly, now also 98 to 99% of four-wheelers are not EV vehicles which are getting manufactured. 95% of your two-wheelers are still non-EV manufacturing. So this battery business is not going to go. Plus, there's huge replacement demand. The thing which I want to talk over here is that because of this EV story, there was a lot of de-rating and a lot of pressure on these battery manufacturers, be it Exide or Amara Raja. And valuation-wise, these stocks got beaten down. In fact, stock like Exide, which used to enjoy a PE multiple of 18 to 20, started trading around 12. So right now, despite seeing profitability growth, we are seeing stock trading around 12 PE, which is quite attractive. Secondly, what about the future? Company is coming with a lithium-ion battery plant. So even if EV shares increases going forward, we will see this company capturing the market share going forward. So that part is also taken care of. Lead is a very basic raw material for this, and it is in a downward trajectory, stable to downward trajectory, I may say. So I think margins are going to increase. We are going to see change in sentiment, and this de-rating would change into re-rating going forward. And we are anticipating a decent upside in Exide. We have recommended around 130, 140 to our clients. We have valuation multiple, target valuation multiple to begin with of 14. So that gives us a target of around 199 to 200 on standalone basis. And for the stake in HDFC Life, we can assign around 30 bucks. So around 230 is something which we are eyeing in Exide. So that's clearly a buy for us. Even Amara Raja is not a bad buy.
Siddarth, hi, good afternoon. So that's one stock idea that you have from the auto ancillary space, Exide. Any other idea in the mid-cap space? If you could talk about that as well.
Sure, Anuj. Two stocks. Firstly, consumer durables. Now, we all know that housing space is gaining momentum, be it affordable housing or entry level. Even premium housing market segment is seeing decent amount of vibration, be it metros or semi-urban areas. And one of the most beneficial sector out of this space is consumer durables. Though all stocks are looking attractive, be it Havells or Crompton or Orient Electric, we are finding statistics of Crompton quite attractive, Anuj. We are seeing that the company has consistently performed. Even in lockdown period, we have seen numbers not deteriorating in 2020 or 2021, and a decent growth rate of 15% is seen. It is also pouring into different business, be it other kitchen appliances, and it has acquired Butterfly, Gandhimati, and the integration is going on pretty well. Now, because there is earning visibility, this space trades at a higher P multiple. So at 32 times P, why we are saying buy? Because there is a revenue visibility for Crompton. It has traded an average of 40 P, Anuj, now trading at 32 P. And from a 1 to 2 years perspective, the stock is looking pretty attractive at 32 times multiple. We don't see much of downside in this name. We have seen historically the stock coming down to around 27, 28 P and moving higher from there. So downside seems to be limited and consistency would be rewarded. And hence we have suggested Crompton among consumer durable to our clients. And the other one is most talked about today, which is Tamil Nadu Mercantile Bank, and our rating is subscribed. I think the numbers are pretty encouraging, be it NIMs at 4.1 or NPA levels, which are in a comparable space pretty low. I think company didn't need this money. It is only for their expansion plans. Their listing was mandatory, and this funds which company would gather would help them in expanding not just in Tamil Nadu, but also, as management spoke on your channel today morning, in different areas. and at price to adjusted book value of 1.4, I think it is pretty attractive. So we are suggesting to subscribe in this name.
Okay, got that. Before we let you go, just wanted a couple of more stocks. You know, a lot of these NBFCs have started to pick up. In fact, M&M Financial is now up, what, 45% this year. And the management, the commentary or the press release that they came out with was also quite good. Any thoughts here?
So I would not comment directly on M&M Finance because we are not covering that as of now. But then I would state, Sonia, that banking and financial space is among the least expensive space at this point of time. You must have seen that how some of the large heavyweights, IT space have become expensive, and because of issues lingering from COVID, rising interest rates, banking and financial names have taken a backseat. We are very optimistic because of private consumption increasing. Even the private capex going forward, RBI has also mentioned that 70-75% of capex utilization is already there, and there might be fresh capacity which is coming in. So financial space and banking space are attracting a lot of interest, and if somebody is finding this market expensive but still want to be invested in, then I think banking and financial is a larger pie one has to be, and it has to be part of the portfolio. M&M Financial we are not covering. Hence, I won't be able to comment specifically on that.
Okay, Siddarth, stay on. We'll take a break and come back. And of course, count down to the market close as well.